Welcome to another episode of Faith and Finance. My name is the Guardian Voice, your host and my co-host, Mr. Ben Samulak, here at Faith and Finance. Today is April the 8th of 2025, and we are excited about the episode that we're going to have for you today. Well, today I'm going to share with you a tax tip that may be helpful, especially if you find yourself in a predicament or situation where you believe you may owe the IRS, where you may have a tax liability this year. Well, we may be able to help you with that. We may be able to change that situation for you. You may qualify for a traditional IRA tax deduction. That's what we're going to look at today. A traditional IRA tax deduction. Now, there's two types of IRAs. There's the Roth IRA and the traditional IRA. I will be following up with an additional segment on just IRAs in general and how you can set them up. But today we're going to really give you this tax tip because time is of the essence. You have about 7 days to contact us or your advisor or your bank or wherever you have a traditional IRA in place, or if you need help in setting one up, we can definitely share some information that might help you do that. So let's get started. The traditional IRA. This is the way that we can contribute to take advantage of the tax deduction for the IRS. So if you work as an employee or have net earnings from self-income, you can contribute to a traditional IRA. The contribution limit for 2024, my friend, is $7,000, 8,000 if you are 50 years of age or older by the end of 2024. As long as you earned this dollar amount. That is very important to understand. The tax code and the IRS requirements are very important. So, earned income for purposes of making IRA contributions to your traditional IRA means taxable wages, including tips, commissions, bonuses, or net earnings from self-employment. So, if you also have your own job, if you provide a product, a service, if you sell t-shirts, if you own a coffee shop, if you make and design cosmetics, whoever you may be in the world of self-employment, or if you have some type of job, uh, that will help you qualify to contribute the amount of those wages and earnings towards a traditional IRA, and that in turn can help you reduce your tax liability. So, another important point, some of you may be married. So, if you have a spouse who does not work for compensation, you can contribute to an IRA for your spouse based on your own earnings. So, if you make more than she, or if she makes more than he, or if you make more than your companion, the IRA for a non-working spouse is called the K. Bailey Hutchison Spousal IRA. Now, the same dollar limit of 7,000 or 8,000 if age 50 or older by the end of 2024 applies to a spousal IRA. And that this means if you have sufficient earnings and both you and your spouse are under age 50, you may contribute up to $14,000, 7,000 for yourself, for example, and 7,000 for your spouse for 2024. And if both of you are older than age 50, that's $16,000. So that's if you do not participate in another qualified retirement plan, such as a 401k plan. If you do not participate, but if your income is below a set amount, you can deduct your contribution. So there are income limits. I'm not going to go into that, but usually, if you have questions about that, we can help you once you recognize that you've got some resources available to contribute. Just reach out. So hopefully, this tax tip helps you at this critical time. Again, we are approaching a deadline, so you do need to do this before April the 15th. So we're going to get this uh, put out and published so you can take advantage of the time that you need. Make sure to hit that like button. Please subscribe to the channel. Also, we will, if you would like notifications, I will be doing a follow-up video discussing uh, both the traditional and the Roth and touch on how you can get started and set one up. And if you have any questions about that, setting up an IRA, you can give us a call, or you don't have to go with us. I mean, if you have a bank, it's usually your brokerage firm or even some credit unions, but we're also here to try to help you if you really need to get started and you don't have a clue of what to do or who to talk to. Just reach out to us here at Faith and Finance. Thanks again for tuning in. We're glad that we were able to share this quick tax tip. Remember, you have until April 15th. So, as the Bible teaches, render unto Caesar that which is Caesar's, because you don't want to owe the IRS taxes. That is uh, there's penalties, and it's real. It can wreak havoc in your life. So you want to make sure you take care of your taxes. And if you owe the IRS and you're looking for a way to maybe reduce that liability and eliminate it, this can possibly do this for you. So we're glad to share this. And thanks again for tuning in to another episode of Faith and Finance. Talk to you soon. Have a great day.